Well, kia ora, and welcome to a mini hoon to Sam Stubbs from Simplicity. Sam, lovely to have you on the kaka.
Hi there.
Now, we're recording this a bit before the announcement, but you've got a big announcement this week. Can you briefly give us a sense of what you're doing, and then we'll dig into the why?
Yeah. Well, look, what we tend to do, Bernard, is focus on the problems and then try and find solutions, right? So what is the problem that we're trying to solve here? It's that we have this massive infrastructure deficit in New Zealand, right? The Infrastructure Commission says it's $210 billion. It's a massive amount of money and a lot of work. And yet on the other side, you have, already $130 billion worth of Kiwi saver money saved. And our economist, Shamabeel Jacob, has sort of calculated that in 25 years, if KiwiSaver managers keep their investments in New Zealand at 30%, which is where they're going at, that's another. We will have another $295 billion to invest in New Zealand, right? The problem with that is that there's kind of nothing to invest in. It's very hard to commit a lot of money in that way, so it tends to go overseas. And when it's invested overseas, that's fine. You still get the returns, but you don't generate the jobs or the economic growth than if you have it invested domestically. So the problem we're trying to solve is how do we get all this KiwiSaver money into the infrastructure that we use and operate and get good risk-adjusted returns for investors, for KiwiSaver members, and the public generally if they want to invest. And how do you generate also economic growth and jobs and get the infrastructure built that we need? So that was the problem. And the way we spent 2 years working on this, by the way, we've been through 50 different versions. And what we've landed on is that we've set up a company called Infra Kiwi. So Infra for infrastructure, Kiwi for KiwiSaver, and Iwi, the Iwi on the end of Kiwi, because Iwi will be big players here. And what we're trying to do is create a vehicle that makes it as easy as possible for all New Zealanders, KiwiSaver managers, individuals, anyone they want, to invest in infrastructure via this company, shares in this company. And the intention is that it will be New Zealand only shareholders. So foreign investors not required, or offshore capital not required in this case, because there's so much there. That will then allow Infra Kiwi to buy what we would call, sensitive assets that might otherwise be unavailable for sale to offshore owners and key infrastructure, and own and operate it for the long term. And Simplicity would start out by making the initial, seed investments, and then once it got to a critical mass, it lists on the stock exchange. New Zealand shareholders only. That means it's liquid. It means all KiwiSaver managers can invest in it. Hopefully, it will be in the index. People can buy and sell shares. So very easy and understood. It would have a golden share, which means the nature and purpose of the company couldn't change. Now, you and I are old enough to know this term. I said this is so it can't be what I call fey-rich whited, which is sliced and diced and manipulated for the benefit of few to the cost of many, right? So the nature and purpose of the company remains the same over the long term. And then it invests in operating infrastructure. So it's not interested in building the power station, but it might be interested in buying it once it's built. And then it focuses on very long-term ownership and operational efficiency. And if it's existing old infrastructure, putting in additional capital to, refurbish or maintain the infrastructure as well. But it's all about owning. The phrase I use, Bernard, is I'd like this to be the biggest and most boring company in the country, right? Which means that it's really big. It addresses that huge pool of money that we New Zealanders will have now to invest in what we need, and it just focuses on owning and operating these assets for the very, very long term. And because they're operating assets and they'll have cash and people will pay for the services, it pays dividends as well. And that means the company is easier to value on the stock exchange. People understand its worth. It's not taking big development risk. But the other thing it could do is it could go to governments and say, hey, listen, if you build it, we'll buy it. And that means it'll actually get built because it'll be a contract between the government and Infra Kiwi to get this thing built. Or it could go in partnership with NZ Super, ACC, Infratil, anyone, Iwi, any one of the big investors to actually co-own and operate these assets. So that's the problem. That's the solution that we think will most work. It's a very long-term play, but it's a very big scale one as well. I mean, it potentially has the chance of being a very, very large company, if not New Zealand's biggest.
So let's just sort of drill down now into the potential scale of this and
Yeah.
how it might operate. For those who are thinking, Infra Kiwi, powered by Simplicity, and Simplicity is the seed investor, if you like. How will people who've put money into other KiwiSaver funds, how will they participate? Will they have to do it individually, or will they hope that their fund managers put a few million in as well?
Great question. So it's designed for people to participate in several ways. Once the company lists on the stock exchange, Simplicity will step away and be just another shareholder. So it will operate as its own independent company, own board of directors. But because it's listed on the stock exchange and hopefully big enough to be in the index, all the other KiwiSaver funds will be able to buy it, and typically if it's in the index, they will own it. So they'll own at least a benchmark position. So people could participate via their KiwiSaver funds, in the sense that all KiwiSaver managers are investing in it, or because it's listed on the stock exchange, if you are a New Zealander, registered New Zealander, for investment purposes, then you can buy and sell shares directly as well. So you could buy and sell it via, directly via your broker or Sharesies or any platform, that sells individual shares as well. So the idea is to make it very broadly available to all New Zealanders who want to invest in a way that allows you to buy and sell the shares directly if you want, or just own it within your KiwiSaver fund and let your KiwiSaver manager make the decisions about how many shares they buy. But the advantage of that is that's one thing about New Zealanders, Bernard. I know you talk about the New Zealand economy being a housing market with an economy tacked on, right? But there are also still very significant sums of money available for investment for the right thing in New Zealand. We can see that because of residential property, right? So if there's a lot of money in that. But there's also $130 billion in KiwiSaver now, and there's a tremendous amount of money owned by individual shareholders or families or foundations or whatever that's invested in New Zealand capital markets. So making Infra Kiwi available to all of those investors was one of the primary drivers here, and we've been in negotiation with the stock exchange and Standard & Poor's and so on to make sure that this can be only New Zealand shareholders, which means hopefully we can buy assets that no one else can, because we can buy sensitive assets for the long term, and listed on the stock exchange means you can buy and sell it as much as you want.
So at the moment, a lot of these infrastructure assets, things like lines, networks, electricity generators, ports, roads, motorways, airports, bus operators, data centers, these sorts of things, they're quite tightly held and often in public ownership fully right now or partially. How do you think some of these new infrastructure assets, so for example, the government's looking at public-private partnerships for and tolls for a bunch of motorways, roads of national significance. There's talk about railway extensions or railways, and some of the ports may be opened up again to public ownership. We've already got some public-private ownership of airports. How will Infra Kiwi be able to buy these things if, for example, they're being built already with PPPs, where the ultimate owner is also the builder, because you've said that you don't want to get in the business of actually doing the building?
Yeah, no, it's a very good question. So we think we'll be very competitive, or could be very competitive, for a number of reasons. First of all is it's a totally local solution, right? So there's just an awful lot of assets that are unavailable for sale to offshore capital. The second one is because we've got a very long-term view on this, and basically what we're looking for is inflation indexed returns. We're not interested in what a lot of PPPs want to do, which is that, let's call it, financially engineer the acquisition so that they can exit within a fairly short period of time and have made a lot of money. What we want to do is make a very fair return over a long period of time, which is fair to the investors in the company, but also means that the vendor of the asset knows that you're not trying to basically maximize return, because these are community assets, they're sensitive assets. Some of them will never make enough money to ever be, investable propositions. So, for example, a regional airport that only has two or three flights a day is probably unlikely to ever be an economic asset. that a council just has to subsidise that from general rates, for example. But there are a whole lot of assets where ultimately New Zealanders have to pay. And whether they pay once when it gets refreshed and built, like water assets, you can either have a massive rates bill to refresh it or build new, and you could run the asset down over 50 years, which means you then have to have another massive rates bill to do it. I think the Wellingtonians are experiencing that right now. Or you can own this and actually maintain it and get a fair inflation-adjusted return over a long period of time. So for the nature of the money that KiwiSaver is, particularly very long duration money, and really values constant cash flows and wants risk-adjusted returns, so wants low volatility assets in a portion of their portfolios, this is a really natural thing to buy. So infrastructure is a very natural asset class for retirement funds, pension funds. So, you see overseas very large pension funds with significant ownership of infrastructure assets over the long term. And this is a way, actually, Bernard, if you think about, if Infra Kiwi got listed and it was in the index, as soon as it bought something, about 3.5 million New Zealanders would own it from the day it bought it, right? That is sort of like public ownership, but without government. And one of the attractive things about those assets from Infra Kiwi's point of view is what I call the depoliticisation of it. If the asset is owned by millions of New Zealanders, the attitude towards the government in terms of regulation will be sensible, and the attitude we will take towards the ownership and operation of the business will also be very sensible too, because we will own, when you own something for the long term, you've got to maintain it. You've got to spend money on it. You've got to keep the water flowing and the lights on. It's a different attitude than if it's a political decision. That's there's sort of that pressure, but in a different way. And it's not the attitude of a short-term owner. Short-term owner doesn't care about it. They just want to run down the asset and fool the next buyer into taking it at the highest possible price. So, there's a really good alignment of interests here. By New Zealanders for the long term, and it's the infrastructure that we know. And I've probably done well over 50 public meetings all around the country. And the last question I've asked every meeting is, would you be happy if your KiwiSaver fund owned the water pipes or the power? 90% of people put their hands up. There's a very because KiwiSaver is a very popular brand. It's actually serving a lot of New Zealanders very well. So the idea of them owning a little chunk of what they're using appeals to them.
Yeah. So just to get a sense of the scale of the issue here, because I don't think everyone's aware of how much extra money not only needs to be invested, but should be invested over the next 30 or 40 years, or the scale of KiwiSaver, or understand that even if the share of KiwiSaver funds invested in New Zealand stays where it is at the moment, at around about 30%, that there is actually enough money in KiwiSaver to fund a lot of this infrastructure investment. A lot of people look at a number like, $30 billion a year or $200 billion and go, oh, we can't afford that. Well, maybe we can. Partly because I love a good chart. And Shamagil's done some crackers here. I'd like to put up this presentation if that's all right. And
please do. Sure.
And just show people what is possible here. So just to get a sense of the required.
Yeah, I think that's a really good chart right there.
So currently, we're investing just under 6% of GDP in investment, and there's a deficit to make up. We're going to have to do some more. And that means we need to lift our investment from just under 6% to just over 9% of GDP, which, that's a pretty chunky amount. And it means that means that a bunch of that is going to have to come from somewhere. Now, the thing about KiwiSaver, which always surprises me, is how big it's gotten so quickly when it doesn't have any compulsion or subsidies of any great note. In other countries, they give you tax-free contributions, and there might be some sort of other subsidy. Say, for example, you don't have to pay tax while the money's in the scheme. But in New Zealand, there's not much government help really, and actually the government help that started has been whittled away over the years. But still, it's gotten to $130 billion in 20 years or so. That's quite a thing. And even though 70% of it's invested offshore, could you tell us here about how much KiwiSaver money there is available to invest in this stuff over the next 25 years, even if it stays at its current ratio of 30%? Because there's a good reason to invest offshore. It helps diversify your risks and get some access to that some of those crazy market returns in the United States. So tell us about the scale here, particularly this chart.
Well, look, it's it's Einstein's eighth wonder of the world, right? Compounding interest, right? This thing just compounds up. And so if we kept it at 30%, Shambil has calculated that KiwiSaver managers have another 295 billion to invest by 2050. And that's an astronomical amount of money in the context of the New Zealand economy. We are sort of where Australia was in about 1985. We don't get how much money we will be saving and how much is available for investment. And if we keep on doing what we're doing, we'll invest more and more offshore. And as you say, that'll be fine. We'll get the returns and so on and so forth. But a bunch of that investment will go into infrastructure overseas. We will end up buying more power companies and toll roads and water systems. And that is great, but it is also, to my mind, one part crazy, because we need this stuff here. It is depoliticized, de-risked. There's no currency risk. There's much less political risk if we own it here. And we generate a whole lot of jobs and a whole lot of economic growth by virtue of building the infrastructure. So we've never had this option before, Bernard. Previously, we've always had to go to central or local government to fund our infrastructure, or at the margin, these PPPs, typically where the money is provided by offshore players. We now have a new reality, which is that we now are where Australia was in 1985. We're just about to see this huge increase in domestic savings, but we have to create the mechanisms by which it gets invested in the economy. And that's what Infra Kiwi is all about. It is trying to bridge that gap. In fact, I think the next slide might show it anyway, there's a question mark. How do we bridge this gap between all this KiwiSaver money and all the need we have for investment? And then, we've created, Infra Kiwi as a vehicle here and set it up so that it will bridge that gap and take it from a trickle, hopefully, to a stream of money, and then, ideally a flood. But it's someone's got to step up and help make this happen, because it's not happening by itself. Because KiwiSaver managers I tried a couple of years ago to get a few of us together and say, let's set up a fund collectively. And they said there's nothing to buy, and it's an illiquid investment. Now, there's nothing to buy, and this is our theory, there's nothing to buy because no one's come along and has been an attractive enough buyer, right? So if you said, listen to account, and we've had a lot of conversations with a lot of councils and the major political parties, and we said, look, here is now another option. Here, yes, you can fund it the same way you always have, but now there could potentially be a really big local player it's only owned by New Zealanders, that can own and operate this thing for the long term, and not only buy it initially, but also provide the ongoing capital that it requires to stay, operating well. And so one of the interesting things about Infra Kiwi is, and obviously it's not a new idea, we borrowed from overseas, but if you have a look at owners like Ontario Teachers or Temasek in Singapore or whatever, they become centers of operational and governance excellence for these businesses. They help improve them because they can hire the right people, they can get overseas knowledge about operations, they can operate at scale, they can do all this stuff, right? So, let me just use an example. Look at electricity distribution authorities, or EDBs, right? They're local lines companies in New Zealand. There are 29 of them, and there's a whole lot of really wonderful, well-intentioned people running them, but there are 29 asset management systems. 29 payroll systems, 29 fleet management systems. There are 29 buyers of trucks to fix the lines. Well, I don't know, could we get some efficiencies there? It means the line staff stay there, but, could we get some efficiencies there, which would be ultimately better for people who are paying the power bills? That would be one example.
Yeah, there's the alternative here, which is for to do it as we've done it for the last, 150 years, at least in the post-colonial era of borrowing, either from overseas. So this is the government or councils or both borrowing, and then paying the interest over time from tax revenues or rates. And I just wanted to have a look at this because governments, central and local, in recent years have chosen not to do it. But as Shamabeel has pointed out here, actually, central government debt is relatively low relative to not just our history but other countries. Not so much for local government, although they still have mostly AA credit ratings. Why not just do this the normal way? Why can't we just rely on the normal borrowing instead of doing it through Infra Kiwi or someone else?
And you're right, we could, right? If there's a $200 billion deficit, the government borrows another $200 billion. That's about 45% of GDP, and that would take our central government debt up by about 45% of GDP. That is a possibility, no doubt about it. It doesn't seem to be what any one of our political parties or government wants to, because effectively what you're doing is you're in theory increasing your sovereign risk rating and debt levels and cost of funding and all that sort of stuff. But for whatever reason, they haven't chosen not to do this, right? They do some, and arguably quite a lot. But what you can see from that chart there is, even if you have the option of central government doing it, local government is really starting to get stretched. And so another source of funding would be useful. I'm not pretending for a second that Infra Kiwi will supplant everything that central and local government would do, but it's another source of funding. And it's very long duration capital. It's very large in nature. It will want a fair economic return for its investors, for sure. So it will be investing in the things, I call it the last bills we won't pay, right? So, I sort of say this half jokingly, but the dream asset for Infra Kiwi would be sewage treatment plants. Why is that? Because you saw in COVID when you went to the supermarket, right? The toilet rolls were the first thing that get cleaned out, right? So a sewage treatment plant is the last bill people won't pay, right? And likewise water, power, and all these sorts of things. But and in return for investing in those, you have to accept that you will have a more modest level of return because you're getting the security of cash flows. So there could be a sweet spot there where you have councils that need a large amount of money invested in, three waters, and their an inability or a reluctance to borrow or target rate to provide all of that. But you're selling a monopoly, so it is a privilege to be able to buy and operate a monopoly, and for that you should expect to get lower returns, but still good risk-adjusted returns for the security cash flow. So, this we'll find out here, but what we know is that there's a massive deficit and there's a massive pool of money, and let's see if we can get those two together.
Yeah. Just finally, I wanted to have a look at some of the sort of details of how it's structured and what it would look like, and just check a couple of things. One of the things you pointed out there is that it will be dividend paying with a relationship to inflation with some sort of real return on top. And that also would have a golden share. Firstly, on the dividend, one of the beauties of KiwiSaver and pension funds like this is that they don't keep paying out as they go. They use the compounding to really grow.
Yeah.
Will there be an option for people to, as you have the case in some companies, of not accepting the dividend and essentially reinvesting?
Dividend reinvestment plan. I don't know. That's certainly an option. The company could do that, and maybe that's a logical option. That's certainly worth thinking about. The reason why we wanted to pay a dividend, though, Bernard, is that very simple, which is that it's much easier to value the company. So typically when you get a company which owns a whole lot of assets, you get this thing called a conglomerate discount. There's just an uncertainty about what some of these assets, and that's why we don't want to get involved in the development of the infrastructure assets or the building. That's a different risk profile. So this one wants to be the company that gets the cash, which means you can value the company, which means as a shareholder you don't get a big discount. The idea of reinvesting the dividends makes perfect sense to me. Maybe it will. That'll be for the company to decide when it lists.
And this idea of restricting it to New Zealand shareholders at the moment on the NZX, they accept money from all comers, and it's all traded on international exchanges, and not many of them anymore, from recollection, have golden shares. So what are the rules, if you like, around restricting the pool of ownership and having that golden share?
Yeah. So the intention of those two things is so that Infra Kiwi can buy things that other people, offshore investors, can't. These will be politically sensitive assets like, lines and water and ports and airports and all these sort of things where New Zealanders don't want offshore capital owning this. So we want to be able to get, this is, preferential access, because we are a more attractive buyer than an offshore buyer. That's to restrict to New Zealand shareholders, but it's also a reflection of the fact now, Bernard, that we have enough money in New Zealand to do this ourselves. And if we look at KiwiSaver growth, this wouldn't have been an option even, I think, 10 years ago. But now it is. So we should do it, because if it creates another funding option whereby New Zealanders own the infrastructure they operate and they don't have to do that via central or local government, it should be another option. The golden share is to give people comfort that this company is not going to be sliced and diced by a couple of wealthy local billionaires who hijack it, take it over, and say, nah, we're changing it, we want to sell. So the golden share is designed to basically mean you cannot change the constitutional nature and purpose of the company. So it will be there effectively forever to own and operate infrastructure for the very long term. And that also gives sellers of assets comfort that the owner of this asset is not going to be, playing silly buggers with the asset later on. Particularly if this is a really critical asset like water or power or your port or your airport, right? You've got to know that the owner of it is going to operate sensibly for the long term. So that's the intention there, is to make, how I went back and I said, we tried to get KiwiSaver managers and they said, look, there's nothing to buy. One of my conclusions was there's nothing to buy because the buyer's not attractive enough. You can't trust them and you can't rely on them. So you need to create a buy that is going to be 100%, no foreign capital required, owned by locals forever, and is going to do what it said on the tin forever. And for that, get fair risk-adjusted returns for its investors. And this whole thing is about creating a really sustainable long-term player, in the same way that Temasek in Singapore is a big player in infrastructure, in the same way that the Ontario Teachers Pension Fund in Canada is a big player in local infrastructure. And this is common all around the world. We're just trying to create a New Zealand version of this. And, we bench tested it with a lot of people to say, would this be an attractive potential buyer of assets? And pretty much to a person, they said, look, this is a really interesting new option for us. Obviously no one's committed to anything, but very, very keen on having a conversation here. And I don't want a New Zealand where we've saved hundreds of billions of dollars in KiwiSaver and it's building roads in Aussie. I want that money building roads and buying power stations and operating the water assets here in New Zealand and creating jobs here and creating growth here. Because one of the things Shamabel didn't have in this pack, but one of the things economists will pretty much tell you, is that what we call the GDP multiplier, i.e. the amount of economic growth you get from a dollar invested, is twice if it's a local dollar versus an offshore dollar. And the reason is the local dollar hangs around. It stays invested. It doesn't just sell the asset and move out once it's made enough money. So we want, this is, just look at Australia, look at what pension funds have done in terms of infrastructure. And so go and compare Brisbane with Auckland, two similarly sized cities. And it is not central and local government that has been they've been somewhat of a differentiating factor because they've had higher taxes and, can afford to rate and tax people more. But boy, pension funds have made a massive difference to the infrastructure of Aussie cities, and they should here too.
Yeah. So just finally, what's the potential timeframes for when you might get listed and get cracking? And what sort of seed capital might Simplicity put in?
Yeah, so the three big words here, Bernard, I don't know. I don't know. How long is a piece of string? Because we will need to go and start talking to vendors, and we want to buy, what are called wow assets, assets that are otherwise unavailable. Certainly to offshore investors and maybe to some domestic players as well. So we don't know. But, time is our friend here. we don't have to do anything in a hurry. We just have to get it right. We don't have to do it straight away. In terms of the seed investment, this would have to be agreed with, Simplicity's investment committee and our supervisor and so on. That will depend very much on the asset that we may want to buy. So at the moment, we're sort of hanging out our shingle here and saying, okay, we're available, come and have a chat. But in the context of what we would aspire to, I think we would be talking, a minimum of hundreds of millions of dollars. And in the current state of the stock market, you would want to be, I think, a minimum of $500 million company before you even contemplated listing to get into the index. Bearing in mind also, Bernard, though, that $100 million of equity capital, remember, you can have a lot of debt behind that too because it's an operating asset. So typically for every dollar in an operating asset, you might have $3 to $5 of debt, right? So $1 billion of equity could actually translate into, $4 to $6 billion of buying power. Mm-hmm. So it's conceivable to see that a company like this could get, in an ideal circumstance, it could get quite big quite quickly and end up owning some pretty important infrastructure.
So this company would be able to take on debt and invest equity and debt in things, unlike Kiwi saver funds where they can't leverage up.
Yeah, well, that's the fascinating part about this, because the offshore investors will not be allowed to own shares, but offshore banks could provide debt to the company and they won't own anything. They won't be able to take it with them. But that could mean that we could also potentially get some lower cost debt to fund our infrastructure than would otherwise be available via local banks. And, the councils are able to be able to get debt pretty cheaply, and the government clearly. But in an ideal world, Infra Kiwi would be a very big company that would be able to borrow money, and invest in these things cheaply. And that would be to the benefit of the investors in the company, but also to the benefit of the consumers, because it would ultimately mean, in theory, lower cost, power, water, services generally. So, we call that, capital efficiency in our language, but basically what it means is, a lower cost of borrowing.
Mm. Sam Stubbs from Simplicity, thank you so much for coming on to a mini hoon on the Kaka Kakitano.
Thank you.